All right, guys. So what is, oh, Cast of Lost. Well done. Good show. Well played. You're a nice guy. What's that?
I'm on a roll.
You're on a roll. Yeah, no, I'm really impressed with you, man. You're going to get a raise. No, you're not. All right, so just to make sure you guys all know where we are, where we're going, whatever, I want to make sure at the review, obviously, we went over a bunch of different questions which discussed how to deal with like purchases type questions. However, I want to show you as many varieties as is possible. So let's go here to this example. I was trying to think of like as many sort of permutations as I could, and essentially to be as rude as I could. So it says here, All the Right Moves Incorporated has determined the following information regarding sales data for the upcoming week. So apparently in weeks 1, 2, 3, 4, we have certain cash and credit sales. Okay, it says their gross profit rate is 20% and desired ending inventory levels, there's that word again, ending inventory. If I see inventory, I probably think something about the cost of goods sold plus ending minus beginning, wah, wah, okay. Either way, ending inventory levels are 30% of the next month's sales at cost. And that's always the way it's done. I mean, it makes no sense to not do it at cost. So, given this information, what are the estimated what? Purchases for week 3. Okay, well, we know the formula for purchases, don't we? It is, once again, cost of goods sold plus ending minus beginning. Okay, cost of goods sold plus ending minus beginning. All right. Now here's the thing, though. I really want to make sure you guys completely can in essence pull this off. We know that this is not as easy as one which just says how many cars we have to buy or something like that. This one's given all in terms of dollar amounts. So here's the tricky thing I did with this question on purpose. Some of this stuff is cash and some of this stuff is credit. When it comes to such things as like account receivable balance, account payable balance, cash collections, cash disbursements, etc., the difference between cash and credit does somehow or another get incorporated, right? But with this, it really doesn't. Like, all we care about is that in week 3, we are going to sell $65,000 worth of stuff. Does that make sense? I'm just trying to be like sneaky with this. That split up has entirely no relevance, right? It's completely rude on my part. Likewise, in week 4, we intend to sell $80,000 worth of stuff, and here we intend to sell $44,000 worth of stuff. Do we all see that? I'm just taking the cash and credit sales and just adding them up, right? It's just silliness. Okay, so y'all can ignore that in essence and just think of it as in week 3 we had $65,000, in week 4 we had 80. Now, now that we got that kind of out of the way, if you know on the exam that you get questions like this where you're asked for purchases, it's reasonably done what? At cost. So these numbers are useless. What are you going to do with all these things? You're going to immediately turn them into what? Good. You're immediately going to take these numbers and turn them into COGS, or in essence, turn them into cost of goods sold. Okay? So, how do we do this? Well, it was told that the gross profit rate is 20%. If we know the gross profit rate is 20%, right? 20% of the monies that you see in the price tag goes into the person's pocket. What must be the cost of goods sold? Good. It must be the other 80%. Make sense? Okay, the cost. Remember, every single time you see a price tag on something, you can differentiate it as either cost of goods sold or what? Good. Gross profit rate, or sometimes called gross margin, etc. Okay, same thing. Could say gross profit rate, could say gross margin rate. Usually it's called the gross profit rate for certain reasons, but just to kind of throw the different variations out there. So 80% of this is cost of goods sold. In other words, I'm going to take these numbers and immediately turn them into cost of goods sold by saying, okay, what is, I'll just use weeks 2, 3, and 4. You'll see I'm not going to need one of those, but that's okay. What is 80% of $44,000, right? 80% of $44,000 gives you $35,200. Similarly, what is 80% of $65,000, right? 80% of $65,000 is $52,000. And likewise, 80% of $80,000 is $64,000. Okay? So I want you guys to, on the exam, see that and immediately know that you turn it into COGS always. Okay? Just boom, don't pass go. Always turn them into COGS. Okay? Now that we have this as cost of goods sold, what are we going to do now? Good. We're going to go back here and go back to the formula and say, okay, cost of goods sold plus ending minus beginning. But let's do this. Remember, it's cost of goods sold for which week, guys? Good. Always read the question and see which week they're asking for. So let's first get the cost of goods sold for week 3. Okay? The cost of goods sold for week 3, we just did the math, figured out was $52,000. So that's the cost of goods sold for week 3. Good? All right. Now, it tells us that inventory levels are going to be what? 30% of the next week's sales at cost, right? 30% of the next week's sales at cost. So what we're basically going to do here is we're going to say, okay, that's not too bad, right? We're going to go here and say what? Good. We're going to say the ending inventory, right? Oh, by the way, right here it says month. That's my mistake. I'll correct it in your packet. I catch these at the end there. That should say week. It should say week in yours. You'll catch that. So sorry about that. Either way, right? It says here we got week 3 plus the ending inventory. Okay, well, let's see. It said 30% of the next week's sales at cost. So if next week we intend to sell $64,000 worth of stuff, we better have what? Yeah, 30% of that in inventory. In other words, the ending inventory is going to be 30% of the $64,000, okay? 30% of the $64,000. That is week 3's ending inventory. It just so happens it's dictated by week 4. Does that make sense? We look ahead to week 4 to figure out what week 3's ending inventory will be. Good so far? All right, here's the tricky part. Minus what? You see, what is week 3's beginning inventory? I'll say it one more time. How do we get a beginning inventory for week 3? Remember, week 3's beginning inventory is the same as what? Week 2's ending inventory. Same thing, right? Week 3's beginning is the same thing as week 2's ending. That's the tough part. Well, how do we get week 2's ending? We look forward to which week? Good. The third one, or the next time period. Does that make sense? That's confusing. So strangely enough, week 3's beginning inventory is 30% of week 3's shit. That's really confusing. Okay? So again, we're going to add there 30% of week 4 stuff. We're going to subtract off 30% of week 3 shit, which is the 52,000 itself. Make sense? Remember this rule? Okay? So one more time, I want to make sure you guys get that. All right? So 30% of week 3 shit is where that comes from. Okay? If you don't mind, Director, go to me real fast. I want to explain this, and I'll show the rest of the problem. So one more time, this is really confusing. Everyone gets, since the question asks about week 3, when you do the formula, you go, okay, cost of goods sold plus ending minus beginning. You go, okay, cost of goods sold for week 3. Got it, right? Ending inventory for week 3. I'll look forward to week 4 to figure that out. Got it. But now the beginning inventory for week 3, don't forget, came to life because at the end of week 2 we said, well, shit, we need some stuff in inventory. We need a beginning inventory for next week. We said, how are we going to guess or dictate what the next week's beginning inventory is going to be? The answer is we looked ahead to that week. Make sense? So the beginning inventory for week 3 was dictated by week 3's sales. Okay? Really tough stuff. And by the way, there's that bookend look that's always going to happen with these questions. In other words, you'll get week 3, right, plus some shit for the next week, minus the same week stuff. Does that make sense? In other words, that number, in this case 52 grand, has to, in some sense or another, start and end the equation. Make sense? So that'll at least help you there as far as that goes. Either way, if I was to punch these all in, right, 52,000 plus 30% of 64,000 minus 30% of 52,000, right? We should get 55,600, or trusty answer A. Okay? So again, tricky part of that question was what? Having cash and credit, ignore that, just throw them all together, and then go ahead and turn it into cost of goods sold and do what we did there. Good? Yeah? Awesome. See you in a little bit. As always.